Good evening and welcome to the Australian Stock Market Show. We had another down week in the market last week, but the news is not all bad. In fact, the bears are not as strong as you think, and we may even share with you why that is. Again, we'll have a great show lined up for you tonight as we get into sharing with you what we think are the best mining stocks for the second half of 2023. We will cover iron ore and we'll get into our thoughts on both big and small miners. First up tonight, we share our hot stock tip for the week before diving into something special, as it's the 5th Tuesday in the month. So sit back and relax. Tonight will be jam-packed as we answer your emails, take your phone calls and give you the answers to some of the important questions around the stock market. Hello and welcome to the Australian Stock Market Show. I'm Dale Gillham, your host for tonight, and joining me is Janine Cox, and we're Australia's most trusted stock market educators.
Well, thanks, Dale, for that lovely introduction. Now, I'm looking forward to a fun night. In fact, today, as I was walking in, I saw a guy spill all of his Scrabble letters. Did you know that?
Scrabble?
On the road. So I asked him, what's the word on the street? Well, you know me, always trying to get the good information with that in mind. We have loads of stocks and a lot to share tonight. However, our show would not be our show without you sharing with us. So let's make a promise that if you are sitting there with a question, that you do something for yourself and call us. So have your phone ready to call into the show when we tell you. Now, let's kick things off this week with a hot stock tip. So Dale, what's the hot stock tip?
Not your
Spill
joke.
the beans.
Not your joke, but
it fell on 4 letters, didn't it?
Scrabble on the
road.
4
letters? 5.
5, I think, which is the first 4 letters you found. Okay. Tyro payments I'm going to talk about today. So let's go and have a look at the chart. On the screen, we have market index. Just having a look at it, and as you can see, it's $1.29 at the moment. Looking okay. Volume's really good for this one, 17,842 or 17 million, sorry. Up there. No dividend yield, so it is a growth stock, and obviously if we look at that 52-week range, it's sort of in that mid-range, but 1 year return 16.22, not too bad. Market cap 671 million, not too bad at all with in that type of area. But what I want to have a really good look at is the chart. But let's go and have a look at Optima and the really nice chart on here, and you can see we don't have a lot of data on it. And I'll go up to the monthly chart and you can see we've got data back there to 2019 or December 2019, and it's first
it really got range bound, didn't it?
It really got range bound, right through here, because obviously this here is your COVID low there, that March, so it floated basically and then dived pretty quickly and then took off and got that range bound. But then it's in that payments type of system where you've got a lot of competition and a lot more coming into it, but it did take off and fall very, very heavily down into this low here in June last year, where it hit 60 cents. But look at this, it's looking really, really nice. Often when you see a really big bearish move, you get this move out through the bottom of it, which looks a little bit more like an upside down cup.
Interesting that you've got those 2 outside bars, which are the blue bars, where it's reversed really quickly. Yeah. So each time it falls heavily.
It does, and looking at the volume, if I put volume on here, you can see volume's not too bad. We had some big spike volume through near the bottom here, but it's not too bad through here. But I'm going to put a couple of things on this monthly chart for you, just to show you. Now, there's some pretty strong levels of support right through here at this $1.13, so there's a really, really strong level there. But if it does start to take off, it's going to have a bit of resistance at $2.26, so having a look at that. But you can see from that low at 60 cents, it did move up 198% between that low in June last year and December. So in 6 months, it moved very, very fast before coming down into here. Now I'm going to put one more little thing on this just to share with you the monthly trend line through here, and it is starting to break through here. Bit of support through there that it hit just recently last month there at 93 cents, but looking good. So I want to go and look at, you
so
that's
just showing the angle, isn't it? It's not actually a trend line.
No, it is a trend line.
Okay.
Yeah, trust me. No, you don't trust me? Okay. You want to get one of the assessors to check me, don't you?
Yeah, I do.
You really do, from there. But you can see how it's moved, and you can see how it's sort of looking like okay, but never really pushing through that sort of level there at around about that $2 mark. But if I go and put on this layer, you can actually see what I'm talking about.
Do you know what caused
here.
that gap down?
This one? No, I don't really care either.
Okay.
But if you do, then you can go and have a look at it. But you can see here, this 90 cent is quite a nice, strong little support level through. That's why it bounced down there, hit that low there on mid-June there at 93 cents. So I reckon if it starts to break through this high there at $1.42 and start to move up, it'll be really, really nice. But remembering that $2.20 odd, that's the sort of resistance level I think is going to be pretty strong for us. But
So how far is it from that green line that you put on the chart to the bottom of that little outside bar in the low?
From this one to that one?
Yeah.
Okay.
What percent?
You asked me top. That's 22%.
So it's a fair way. So
it's a fair way. So it's a more trading stock at the moment. It's a little bit more high risk because it's on the lower end of it.
Yeah.
But
And
there
it's
is
a lower
some good
liquidity.
ideas. But if it does break through that prior peak and it heads up into that sort of $2.20 range, there's a 50-odd% move through there. So I would expect if it does break through that, it might do that over a couple of weeks. But anything else you want us to add to that?
Look,
or?
I just like the cyclical nature of this
It
thing.
is.
I mean, when it bounced off that low there, it went up to a high after a number of weeks, came back temporarily, took off again, another low, and just repeatedly did this sort of thing, and it's doing it again. So we could see it, like you say, meet a bit of resistance up there and then come back, test, that'd be nice, and then before taking off.
Janine, I'd trade it with your money, no problems.
Thank you for that. All right, that's it for our weekly hot stock tip. I hope you're ready to text or call into the show. We prioritise callers over anything else, so call now on 03 9290 9988. That's 03 9290 9988. Or you can also text us on 0423 959 846.
You sound like one of those Demtel commercials.
Did you give
now,
out
don't
my
you?
phone number?
You know me too well. Now, to give you an incentive, the first caller into the show right now gets a free copy of not this book, but this book, Accelerate Your Wealth. If you already have a copy of this book, you may know somebody who would benefit from reading it. So pick up your phone right now and dial 92909988. Now, while you do that, tonight is the 5th Tuesday in the month, which means we have something really special for you. So let's go to the charts. Now you've done this, haven't you? This really special
Well,
thing.
I was on my training wheels because, as you know, I use other techniques. You favour RRG, and I know that you love it, and it shows a lot of interesting things to people, and
it does.
It works.
I show people about this every single
Yeah.
Monday. I do get into this.
So I decided I need to get up to speed with you so that I can say I know it too. So
Well, you do know it, you just pretend you don't, so you don't have to do it. So what are we looking at
So
anyway?
what we're looking at is we've got some of the stocks for tonight.
Okay,
So-
these are some of the stock. Okay, so what
yeah,
are
so
they?
some of the stocks in the topic tonight, these are the miners,
Yeah.
and iron ore miners right in the middle there on the screen. So RIO, FMG and BHP
So
are
if I
sitting there.
zoom that up, they can see here, Rio is that blue line, FMG is the red line, then we've got BHP is this one, Min, and we've got Red Hill over there,
Yep.
and Flinders Mines over there. Is that? Yep.
That's Flinders, yes.
That is Flinders Mines. I just couldn't see
So
it.
the smaller ones, as you pointed out to me earlier, are on the outside.
Do you want me to explain this,
Yes,
or do you
thank
want to
you.
explain it?
I've got my training wheels on
You've got
still.
your training list. So basically, for those of you who aren't Talking Well subscribers, I do these charts for, like yesterday I did the mid-cap 50 stocks. I had them
Okay.
all up on here to work out. What we're looking for is stocks that we are putting onto our watch list for possible buys before they turn in price and before they become a buy. We're also looking for stocks that are slowing down in the momentum and we may need to sell. So basically you can see there's 4 different colours. So you've got green is basically they're running faster than whatever is the reference point, which is that midpoint or the apex in the middle there of the square. Now, our benchmark here is the S&P ASX 200, so we're comparing all of these stocks to see how fast and how volatile they are compared to the index. Now,
So what difference does it make? You've got 3 months of data there. What if you
Correct.
made it 6? What does that do?
if I make it 6, the tails get longer.
But does that tell you something or give you
If
some
I
more
keep
clues
doing it, it
about...
gets longer and it gets messier.
That's my kind of chart.
Yeah.
Does that tell you something though, with a longer tail?
Well, all it does is it shows you the path that they're taken. So what we want to do is we want to pick up stocks before they really start to take off. This is the huge benefit of this chart and why when we're working with our students, why I focus on this and why our team focuses on this in some of our recordings when we're looking at working with stocks with our students, is because we share with them when they're about to take off so they can do their research before the stock takes off and then get in nice and early, because people struggle getting in at the right time and getting out at the right time. So this is what's telling us at the moment. What we're seeing here is there is nothing in this pink area, and these three stocks are in the blue, which means they're outperforming the underlying, which is the S&P ASX or XJO, the top 200 stocks. But if we see a lot of stocks in that pink, that means there's going to be a big move happening to the upside. If we see most of them in the green, that means the market is running very hot. So what we're looking for...
But I look at RIO, FMG and BHP, and while I agree with you that they're holding their ground, right, relative to the index, they're not hot.
They're not hot. No, they're not. This doesn't mean they're super bullish. That just means they're running faster than what the market is. Because if we go backwards, so we're going back to this point in time, this here is January 2022, and you can see BHP and RIO are down there, Fortescue down there. And
it's going to be interesting, actually. We can remember what this looks like. So everybody has to remember what you see now. Do you think you can do that for when we come into the topic later? Because it's going to be relevant.
So let's look at RIO here. So this is now May last year. We're going to look at a chart of RIO May last year and look at it. Doesn't look super fantastic, but this is telling me to start doing some research to look at possibly buying it. And then as we know, RIO took off. And as you can see, as if firmly going around, they do move around. So this is giving us a real indication of what's going to happen into the future and getting us in and looking at what stocks we could be buying early.
I'm still not 100% sold. Just look at the chart.
Well, everybody who watches this on Talking Wealth, my market wrap on Talking Wealth, you guys have to email Janine personally, and I'll give you her email address. And you can tell her, are these any good? So, and we can convince her, guys.
Okay, I'm waiting.
What do you reckon?
So that is it for our thoughts on these mining stocks. Next, we have some great stocks to chat about, including BHP, FMG, and loads more. But now it's time we get into our first email.
Now, our first email is from Arun, who says, hi guys, thanks for your valuable ideas, and you guys are doing a great job. What are your thoughts on Megaport? Where do you think the short-term and long-term target is? Thanks, Arun. So Megaport, what do you reckon?
Actually, I love that name, Arun.
Arun, yeah, I know, it's nice.
It is.
Sounds like a precious commodity, doesn't it?
Doesn't it? So it's
I'm sure
appropriate
his
for
partner
tonight.
thinks the same.
And look, Megaport, MP1, has been so bullish lately. It just looks incredible. So well done in picking this stock. That's the first thing.
We're short term and long term.
Yeah, short term, I think it's met resistance where it is now, around this $12, $13 mark. I'd expect it to come back just a little bit from there. But beyond that, I think it could head up closer to $15, $17. What do you think?
Okay, I mean, I'm not discounting what you're talking about. It has been running pretty fast though, hasn't it? When you see this type of move, if we go and open at that monthly chart, you can see very, very fast move. So having a bit of short-term weakness doesn't
After
surprise.
5 months.
Well, look, you know, to me, I don't have a problem with that. If we use the trend line, you can see the angle of this move. It's pretty steep compared to, if I drag it over there, it did it over here. It did it over here for a little bit. It did it over there for a little bit, and it did it over there for a little bit. So, you know, how far can it run at this speed without coming back again? So that's what we're talking about at the moment. But giving something a price target is something we don't really like to do, because that can set somebody up for failure, can't it?
Well, we do price targets, Dale, in Module 4. So I'm not sure what you mean.
We teach our students how to do it for themselves, but we also teach them how to manage that for themselves. Whereas just giving them out to people, they might get a fixed view that Janine said.
So you sell at that level. Is that what you're saying with your price targets?
A lot of people
we
do.
don't
They
sell
go,
at the level.
Janine said it's going to $15, so I'm going to hang on to that even
until
though
it gets there.
Until it gets there. And if it doesn't, then they could be stuck at $2.
Exactly. With stocks that are like this one,
But Janine, we do have a caller on the line, so we do need to get to that now. I believe we've got Parvi on the line. Is it Parvi?
Yeah.
Did I say that correctly?
On the line.
Did I say that correctly?
Yeah, Parvi, that's right.
Oh, fantastic. Welcome to the show, and Janine's excited because we have a lady on the line. Where are you from, Parvi?
I'm from Perth, Western Australia.
Oh, fantastic. And you've got a question for us?
Yeah, so I just wanted to hear your thoughts on 5EA, 5E Advanced Materials.
Yep.
It's a penny stock that I bought recently because it's almost at the lowest point in the 52-week range.
Yeah.
So what do you think about it? Do you think it's a stock that should be held for the long term, or should I exit? What are your thoughts?
Did you do any other research other than it being at the bottom of a 52-week range?
Like such as?
Like any fundamentals? Did you look at its earnings, or whether its profit forecasts are? Any of that sort of stuff?
Yes. I'm fairly new to investing. I'm a second-year uni student.
Oh, fantastic.
So I'm really new to all of this.
No, that's okay. What are you studying?
Finance and engineering.
Oh, fantastic, fantastic. Finance is a really, really good subject to learn. So
What about
engineering's more
engineering?
Janine's style.
Oh.
She's a qualified engineer. I bet you didn't know that one, eh?
Oh, that's good to hear. What major?
Yeah, what major did
Chemical engineering.
Chemical.
Okay, cool.
That tells you a lot about Janine, doesn't it, Parvi?
Yeah, I was a mad scientist.
Cool. So Janine's got 5 EA up, so she'll have a bit of a look at it and we'll give you our thoughts on it. Thank you for calling.
All right. First of all, is this one to buy and hold or to sell? That's the thing. So
It's not a buy and hold stock.
it's not a buy and hold. It's not doing well at the moment, given it's come all the way back down and traded through this low here. So that there was a low in May 2023, Parvi, which was 41.5 cents. Now it's come back down to that level and actually gone through it just slightly. It could be trying to find a bottom right now, but I'm just a bit concerned about it. You know, it's really hard, isn't it, if you've had a stock and it's traded to a low and, you know,
Can I ask you
what
a question?
do you do?
Because I want you to answer this one, because I know what my thoughts are. You see, like even on market, whatever we talk about, it says, you know, 52-week high and low. Is that something that's relevant? Because that's what she mainly bought on. Why isn't it relevant?
That's the story. Look, when I first started in the stock market, I used to read that everywhere. And so many people would be looking for a stock that would be near its 52-week low. And I can remember sitting there with my mum and we were looking at that data. And I would just say to you, that is the worst possible thing to go by. And that's no fault of yours at all. It's just about how much you know and where you're at in your journey at this point. So, but I would say put very little emphasis on anything like that when you're making your decisions, so that it could be something that you put in there if you want to, but just as a very minor consideration. So the thing with the chart is it going up or down? And looking at this stock right now, it's trying to find support at a low, but if it keeps going down below this low, then it could keep falling. Now, the other challenging thing, Dale, is when the stock is at such a low price level, like this. So we're talking about a stock that's down at about 40 cents now. So if it's fallen away and she's lost a bit of money on this stock.
Well, she didn't actually say where she bought it.
She didn't say that, but look, volume's getting low as well, but that could mean that there could be a turnaround. The fact that the volume's dropped off as it's falling is not supporting the move. So I guess, you know, if she'd continue to if she's held it for a while, hoping that it was going to go up on news, I think that I'd just give it a little bit more of an opportunity to see if it does find support around this low.
She's only just bought it. That's what she's saying.
But when she said she just bought it, she might have bought it up here, and it doesn't have to fall very far to be a big fall percentage-wise.
It can take your money pretty quickly.
Yeah,
hopefully she didn't put much into it.
So if she bought it here, it's already 25% down.
Well, the good news is she's doing a finance degree, which means she'll understand or she'll learn about the fundamentals type stuff. She's also, the other second good news is she's going to get a copy of my book.
Oh, that's great.
Because she's the first caller. So have a read of it and I'll give you some rules around things. But please keep calling in and obviously asking questions, because we love having young people calling into the show and getting a good education. So that's it on E5EA, is it?
Well, thank you very much for that, Parvi. Now, I'm really excited because we've got another lady calling in, and it's Anna. Hi, how are you? Anna, is it?
Yes, Anna, yeah.
Anna, welcome to the show, and you've got a stock for us tonight.
Yes, so I purchased GI Engineering Services for high dividends, as well as a growth stock. And I'm just wondering, I did make a bit of gains through it. I held it for about 3 months.
Okay.
I'm just wondering if it will still continue to go up, and if it's, you know, sort of like a hold stock or not.
Yep, really good question, and interesting stock too, by the way. I'm just looking at it. It looks really nice. So we'll get into that for you. Is that all the questions you had?
Yes.
Okay. You have a lovely evening, and thank you so much for calling into the show.
What
All
an
right.
interesting stock.
It's a really nice little stock, isn't it? GR Engineering. Wow, that's great to see a little Aussie company doing well like that. It's gone through all those highs as well just recently. So, you know, it might come back temporarily, but this could be really good for, you know, medium to long term, couldn't it, if it gets going?
Well, it could be. I mean, it didn't really pull back too much. I mean, obviously, we've got that high in January of 2022, so it's done a lot, you know, in terms of going sideways. There's August 22, which is all-time high, but still didn't come back a lot. But we have 1, 2, 3, and so far this month, with nearly the 4th month, straight up. So
Yeah.
it
What's
wouldn't
it doing on
surprise
the
me if
weekly? Can we just have a look at the weekly chart?
We can do that. You can have the mouse. How's that?
Okay,
I'll
look,
be the gentleman.
lovely. Oh, I mean, the thing that I'm liking about this is just the trend's beautiful. It comes up, down. We get this nice little move down, but it's only for a week or so, and then it takes off again. That's all the signs of a really nice trend, isn't it?
Just stay with it. I'd put a trend line underneath that. And,
Yeah, let's just do that now so we
Anna,
can have a
I'm
look
not sure
at
whether
it.
Anna knows how to do that, but
And I'm not sure I can do that right now because I can't see your trend lines.
What?
Okay, here we go. We've got a little line there, up there. That's lovely underneath there, isn't it?
it's just perfect.
Yeah, so she's just got to decide what her rules are to sell, or whether, if she's doing this for the medium to longer term, even the monthly chart might do well. You know,
Well, that's
trading
the other
some
thing
rules
too.
on the
It
monthly.
just takes a lot of that noise out of it when you're looking at that monthly chart. But I do like what she's picked.
Good
Great
choice.
looking stock. I think it's great. All you need to do, Anna, is just set your exit strategy, which is if it's a trend line, it's a trend line. Whatever you choose, but I do like it. So thank you for calling in. If you want to be like Anna, you can call us on 92909988, isn't it? Is that from memory?
That's correct.
Did I get it right? I'm not that old at all, am I? Okay.
You're
Yes,
okay.
my temperature's not that hot.
No, you're right. You're doing well. Now, before we get into some more great stocks, it is your time to support the show by hitting that subscribe button on YouTube. So do your bit for the show. And whilst you're there, hit that like button and tell us what your favourite stock is right now. Well, Dale, it's time that we get into the topic for tonight. Are you ready?
Nope.
Before we do, I'd like to share a quote by Jim Rogers, co-founder with George Soros of a US hedge fund, who said, "Buy low and sell high. It's pretty simple. The problem is knowing what's low and what's high." Did you like that one?
I love that one
Yeah.
because you ask people all the time, you know, when they go, "I want to buy when it's low," and I go, "When's that?" And they
Gosh,
go,
that sounds simple,
I
doesn't
don't
it?
know. And it's like, duh. It's like, what is low and what is high? And you go,
You can
"Why
see it
did
in
you-"
hindsight, can't you?
You can, and people say to me, I go, "Why did you buy that stock?" And I go, "Oh, I thought it was low." And I go, "Well, is it low now?" And they go, "It's lower than what I bought it."
Well, that's why you need the analysis to determine where the lows and the highs are likely to be.
And it's also why I don't really like people telling me about buying the dip, because when is a dip not a dip?
Well, we know the answer to that in Module 5.
Janine.
Okay, it's time for our topic, and we've got loads to cover. So tonight is all about the best mining stocks, and in particular iron ore stocks, both big and small, and we'll give you insights into our view on how to determine the lows and highs in the market and on your favourite stocks. We'll also share the best opportunities, explain the risks, and give you our pick of the best miners for the second half of 2023, along with what you need to pay attention to.
What are you laughing
I
at?
think you need to pay attention.
Remember to pay attention. No, remember, knowledge is the enemy of fear. So our goal is to share with you how to invest the safest way possible. And that means preparing you for what's ahead. Now, it's inevitable that you will come across stocks that are much higher risk than others. And for this reason, it's vitally important that you are equipped with the knowledge to navigate risk safely. Now, we can guide you, but at some point it is up to you to take that leap of faith. Now, if you are one of those people who has a fear of failure, then this will hold you back from being consistently profitable. Now, we can fix that if you decide to undertake one of our courses.
Now, I thought you were going to say you can't make them drink. You know, you can lead a horse to water, but you can't make them drink.
You know, I can't make you not tell jokes. I wish I could.
Now, you're so right, Dale. Now, getting onto iron ore, we know that it's used in production of steel, which has so many uses, construction being a big one, and steel accounts for almost all global iron ore demand.
Okay, when you say that, Janine, it gets me really excited to know when the next commodities boom will start, so you can ride the wave by getting into the best iron ore miners.
Now, it is a little more than that, Dale, as one of the most important things to remember is that you need to construct your portfolio in a structured way. And this means having stocks you've selected from different areas depending on where the future growth is going to come from, such as when the commodities boom will start. Now, it's important to remember while some capital should be allocated to mining stocks, there will be times when the wisest thing to do is actually just to leave the cash in the bank and wait, which can be difficult for some people. The idea is to buy into these stocks at the lower risk time, and doing this increases your probability of success. And there are simple strategies to help you do this.
Well, I mean, as Jim Rogers alluded to, while in principle it sounds simple, he said the problem is knowing what's low and what's high.
Exactly.
You know.
So you can have stocks that have actually traded to their 52-week lows, as we were talking about earlier in the show.
Is that the low you should be buying them?
That's right. I mean, it could be part way down a big decline and they're just buying there thinking that that's the bottom.
And people are worried about when a stock goes through its
Can it go
all-time
low?
high. Can it go higher?
Oh, yeah, can it go higher?
And what's it going to do? And that's where people get it wrong. Especially, you know, often people buy at the wrong time.
Yeah, well, sometimes we can get stocks going through their all-time high and it can be the perfect time to buy them, and other times, depending on the stock, they can come back quite heavily after doing that.
When is cheap cheap?
Yeah, it's all about probability and weighing it all up, isn't it?
Cheap, 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 cheap.
Oh, jeez. That
cheap.
was really bad.
Cheap.
Okay, Dale, I want to let everyone know that we have got a whole library of important information to share with you over the coming year. Now, this week we take a look at the RBA index of commodities. Now, you'll notice on this chart how the price has been very volatile and is falling. We know from the analysis that we teach that the probability is high for the fall to find support at around 75 to 80 cents before rising again. So if there is further downside, it's likely to be short term, and this will be factored into mining stock prices. It all makes sense when you look at the charts of the big miners, and we'll do this shortly. So the message is, before buying, make sure that you understand the direction of the underlying commodity or index before you buy.
Well, we just looked at a chart representing a basket of commodities, but we can also look at iron ore chart or an iron ore chart. So we're going to do that next.
No, Dale. That's for a future show. And now everyone's going to write a comment, aren't you, under this video in YouTube asking for it. So go on.
Okay, so what you're telling me is I'm a bit of trouble right now. No, but hey, you did ask them to comment below the video, so you can't complain if that's what they're actually doing. So what's next, Janine? The economic clock is ticking, and the mining and metals is critical.
No, you're so right there. Good try. But we're not discussing the economic clock today either. If our viewers comment below the show, we'll show it on a future show. It is really interesting though, so make sure that you let us know if you would like us to cover this economic clock. Now, next up, we've got another graph showing weakness in commodity prices. The graph shows how commodity prices are likely to remain weaker overall into 2024. This is why you have to be very selective about which iron ore miners you buy and when. Falls in mining stocks are generally far more volatile than other stocks. So why would you want to ride them down?
I don't know, it's like a roller coaster, isn't it? You love riding the down bit, don't you?
I don't know.
Doesn't happen in stocks.
Don't you like to go up to the peak and you can see for miles? You're just looking at the view.
I love it.
That's the best part.
If I'm going to Disneyland, I'm not being on the Ferris wheel.
You don't want to.
I'm going on the rocky road. That's what I'm going.
Okay.
That's what I want. But you are right. So many people get into mining stocks, not realising that they're far more volatile.
Oh, yeah.
And while they're going up, they love it. But as soon as they start to tank, they don't know what to do. So
that's right.
We're here to help them. Yes.
Yeah. Now, before we get into the stocks, we have to look at what's next from the Reuters website.
Now, this is interesting. Goldman's seeing bullish signs in sharp destocking in commodities, Janine. That's contrary to what we've just seen.
Now, this was April or May, I believe, 2023, so not long ago, and it says the bank forecast returns of 30.3% on commodities over 12 months. Now, we're not seeing that.
Well, we're not, are we?
No, so, we've had this period of a bit of consolidation. Mm-hmm. We're going to show a chart later on in the show. I think that one will be for the YouTube viewers for the Talking Wealth viewers, but you can see if you're looking at some of the stocks like BHP and RIO and FMG, they've just been going sideways more or less.
Well, it's interesting because obviously we're talking about iron ore and everything else, and that obviously is construction.
Down.
And we're getting slowing down in construction here in Australia.
Well, it's the whole China effect, isn't it?
Well, it is, but then you see China starting to ramp up a few things to try and get going. India's trying to get going, so it'll be interesting to see what happens because we're slowing down.
Yeah, we might have to wait a few months though before that takes off.
Yeah.
But we know the stock market factors things in 6 months in advance.
Well, they do, but watching the commodities will help you understand that because it's the leading. When you see them moving up and down, that leads everything else. Because
it does.
To get a new dishwasher, it has to have steel.
That's right.
And to get steel, you've got to have the iron ore. So
depends on the dishwasher. These days, you don't know what's in it.
This is my wife's dishwasher.
They only last. Some of them only last. Yeah, your wife's dishwasher will probably last 20 years.
Yeah, look, they're perfect hands for dishwashing. So nice and soft. Okay. So Janine, the graphs are pointing to lower prices now, suggesting we're unlikely to see commodities rise until 2024. But here's one thing: how fortunate are we, as this gives everyone plenty of time to prepare and learn properly ahead of what we think are going to be the biggest opportunities in the next few years.
So let me read between the lines, Dale. What you're saying is that now is the time to learn to trade, and everyone should contact our team to find out what they can do to get started. You planted that one there, didn't you, for me to say?
Well, it is the smart thing to do, isn't it? I mean, gee, because at the end of the day, we've got to be a Boy Scout and be better prepared to profit.
That's so good.
It's all too late when the bull market's already happening, and then they try and jump in and figure it out. So anyway.
Good advice. Okay, now you've said that, we're going to move on and have a look at some big miners and small companies. And then later on, in the bonus content for our Talking Wealth viewers, we have some information about iron ore and even more stocks we know that you will love.
Okay, so let's get into the stocks now. Are we getting into the stocks now, or can we look at stocks now, or do I have to say it another way?
Please.
Stocks, please.
That's better.
Thank you.
All right, now let's go to the watch list. So I've got a short list of a few stocks here. So the first one, and some of you might be surprised not to see Rio on that list, but that's for later on.
We've got Red Hawk and Red Hill. So is red your favourite colour?
Yeah, BHP. Obviously is at the top of the list with the market capitalisation, the biggest one of the lot. It's the mammoth. What's interesting here is the dividend. So over the last 12 months, it's around that 9%, and Fortescue around 13.5. Now, there's no secret then, is there, as to why these stocks have actually held up so well in price, given the dividends that are being paid out in percentage terms. But
do you remember when they used to pay really low dividends?
Oh yeah, it'd be like 1 to 3%.
Yeah, really low dividends.
And we'll go back to that at some point when the stocks go into that the bigger boom phase, and they'll start using more of that capital. Rather than paying it back to shareholders. So, but FMG and Rio and BHP are obviously up at the top of the list, and then we've got Mineral Resources. That's MIN. Next, which is actually done really well. It's up at around 8%.
It's only a daily watch list, so don't get too excited, Janine.
For the month. Look, Red Hawk actually is in front. I better change that. Actually, let's just quickly change it to the year because I haven't looked at the year.
Red Hawk's still in front.
So Red Hawk's done extremely well. Now, these two don't pay any dividends at the moment, so that's showing 0 on the dividends front. So anyone who's looking for dividends wouldn't be wanting to have these stocks in their portfolio. So that could be a criteria that removes them from their watch list.
Obviously market cap, around 134.2 and 274.5 for those two.
They're very small, so they may not even come on your radar depending on whether you're choosing the top 100 stocks. Maybe some people might have the top 300 on their list, or just whatever stocks. It might be any stocks, but they might have to meet some other criteria.
Well, generally when I'm doing an RRG graph for everybody on the Monday market report, I normally put 500
as the limit.
As the limit, 500 million.
Because for an individuals can buy stocks down at that lower level, but it's just that, fund managers cannot.
They can't, correct.
All right, so we've got some nice little stocks there. So let's just have a look at BHP. We've got that market capitalisation again. Now, BHP obviously is a diversified natural resources company. It's commodities. Its interests were in oil and gas. Now, I've just kept that on there for something to talk about. Now, because it got rid of all of its oil and gas, do you know what BHP is in besides iron ore?
Besides iron ore, isn't it into lithium and stuff?
It's
No.
there's all of
Yeah.
the rare earths
The rare
that,
earths,
that it's
yeah.
into. Yep.
I
So
was trying to be careful and not say the wrong thing, but I was thinking of rare earths.
yeah. So I mean, BHP's got a really diversified list of
Because it got rid
commodities
of
that
its gas and petroleum over to Woodside. So,
I mean,
yeah.
I was actually surprised that Rio's list is quite diversified as well. I wasn't expecting
well, they're
that.
trying to be
because-
more green
Yeah, I know.
or
That's
ESG.
right. So look, BHP is probably the best pick because it's so diversified. I'd have that at the top of my list. And looking at the chart of that, this is what we were talking about before with the sideways action. And I'll just bring up the monthly chart. We can see that there's really been nothing happening on this stock since its run ended really in February 2021. You could argue that it went up here into July, but really it's still at the same sort of level now as it was back in that period in middle of early 2021.
It still looks good though.
It still looks really nice, but I'd really, given it that it's been trading sideways so long, at one point I was hoping it would take out this low, and we did talk about that on a previous high, but now I'd rather see it fall. Right,
Okay.
I'd like to see a bit of a flush out in these mining stocks so we can just get through this period of consolidation. But you know, a rise above these two peaks here would probably indicate that's not going to happen.
Yep. Okay.
But look, I was getting excited actually, which it's funny, isn't it? Because normally we get excited when stocks are rising, but at times we can also get excited when stocks are falling.
Sometimes I get more excited the more it falls. Because if you know it's a really, really good stock and it's being oversold, then that's a great time to start doing your research.
Yeah. So, I mean, tips for stocks like this, try to pick them when they're going sideways. Don't pick them when they're falling. Just wait until you've got the momentum. The big money, if it's pushing it up, then that's what you want.
Yeah.
So FMG, now we said $61.2 billion and Fortescue Metals, it's obviously into exploration, development, production, processing of iron ore. The green renewables, there's a big push for FMG, obviously, with its company and the activities that it's
I think all of these
FFI.
companies will be on the lookout for much more green technology and companies to bring into their fold.
Definitely will be. Now, I mean, you think about it, if they're paying out so much in dividends at the moment, if they turn that around and decide to hold on to that money, they've just got such a war
Cash
chest.
cow to go and buy
huge
other
cash
companies.
cow. Yeah.
They're just letting everybody else do the
Heavy
hard
lifting,
yards, the heavy
yeah.
lifting before they come in and buy.
So FMG looks interesting as well, but like I said, ideally, given this move, and we saw a reversal that occurred here in July 2023 and it pushed lower. Now, keys to trading some of these stocks. BHP is obviously going to be easier to trade than an FMG.
Yes, it will. F&G is more volatile, so
But
you need to be a little bit
without
on it.
really good rules, I mean, look at what this has done.
Well, it's not buy and hold, is it?
It's not buy and hold. Look at the stock. You could have been in there in March 2017 and it didn't come back until 2019.
2
so
years,
it's
yeah.
more than 2 years you might have to wait. So if we look at where we are here, December 2020, we're now almost 3 years into a sideways move and you've made nothing, you know, except for some dividends, which are pretty good. So that's why they're able to hold their share price so well that
So
as
who
they
have we
are.
got next? Min.
So
This
Mineral
is one of your
Resources.
favourite stocks. I know you
Oh,
don't-
look, it was for a while, just because it traded so beautifully. Market cap 12.5 billion. Now, it's a mining services company with a number of mining operations across lithium and iron ore. It provides mining, construction and infrastructure services in Australia. So it's quite diverse in
looks
terms
so
of
nice.
its operations, but it's really looks, you know, it trends beautifully when it gets going, but it will be cyclical like the rest of them. When the commodities are down, it's going to pull back and fall
Well,
away.
commodities boom is what, normally about 6 or 7 years long, aren't
It
they?
is, yeah. So if you look back here, you can see, just like BHP and Rio, it had a big decline into 2016. And it's, you know, like FMG, eventually it took off nicely, but BHP it's well ahead actually of where it was. If we go back in time, we can see it's well ahead of where it was in 2011, 2012. Unlike BHP and Rio, if I just go back quickly to the BHP and Rio chart, which are only just above those levels now. And that's why I think that there's a hell of a lot more opportunity in those big stocks once they get going again. But this is looking really nice. It's finding support here, and I just look, beautiful little trend line down there on that decline. Now, Flinders Mines is a smaller one, so this is for people who are prepared to handle a little bit more risk, and you can see on that weekly chart how sketchy that can be. So therefore, you've got to really watch that volume that daily and weekly volume to make sure that your position sizes are not going to move the market depending on how big.
Why is it called Flinders Mine on the tab and then it's Red Hawk Mining?
That may be because I've made a mistake there. Have I?
I don't
Actually,
know.
no. I think it changed its name.
It must have changed its name.
Yeah, that's right.
Somebody's typing down below this video on YouTube going, Janine.
I did look it up actually, and now that I think of it, and yeah, that's why I've left it there because Flinders, it has changed. Yeah. So Red Hawk Mining Limited, it's an exploration and development company focused on commercialisation of the Pilbara. So that, I mean, there's a lot of money in there.
Yeah.
And then when we're looking at this chart, it looks like a long-term bottom has occurred on the stock, especially with this recent rise here. So I'd be expecting big things from this little stock. And remember how we've showed people one little strategy that's really good on these smaller stocks is you get these little consolidations that happen along the trend as well as, and now it's gone off.
You clicked on the wrong spot.
You get these little consolidations, and when you see these sort of shapes happening, often you can get some really good runs out of them, so it's something to watch. So that's a nice little one. Now we've got...
That's a lot more speculative.
A lot more speculative, and so is this one, even more so. So some of these smaller miners are up and coming. It's not for people who are beginners. It's not for people who are looking for long-term investments. This is for people who want to speculate a bit more and use a very small amount of their money to put it into something that... but you need rules, regardless, as we always say.
Yeah, but I mean, you know, when you're talking about Red Hawk Mining, was it 60 cents?
I actually really like this little one.
60, 70 cents, people are going, but I can get more shares, Janine, at 60 cents than I can at $4.
Well, that's irrelevant. Yeah, it's all percentage based, isn't it, in terms of the gains?
Not 10% on.
But I mean, if we just come back to this one quickly, you can, if depending on the rules that you've got, and there are some really good rules in the course, just this rise here, and I'll measure that with the percentage tool if I can click on the right thing. You can see there 155% just in a couple of weeks. Now, that you need an absolute ironclad strategy that you are prepared to stick with if you're going to trade something like this, and you need to be completely disciplined about it. It can't be, I'll just buy some of that, put it in the bottom drawer and see what's going to happen. It's not about that with these shares, so that's why you need that. If you want to have a go at these sort of shares, you've got to have that extra training.
Well, I think the filter is if you can't stand having a loss on a stock, then you shouldn't be buying a stock like this, because it will bite you in the backside.
If you can't use rules to buy and sell, then
but if you're somebody who fears losing a stock like this, you're going to have some losses. It's just going to guarantee it. You might have some big wins, but you're going to have some losses. But if you can't stomach a loss, then you shouldn't even go into a stock like this.
It's a good point that you're making. So
because it's not like a BHP that you
this is something you have to think outside the box when you're trading. And we teach traders how to use certain rules, but we teach them how to think. And how to actually work the rules around the strategy they want for the stock that they're trading. So that's the beauty of what we teach. It's not just a cookie cutter strategy, which when I first started in the stock market, that's what they were dishing out. And then I realised what they were actually teaching, and I just thought, this is just ludicrous. So,
we got any more stocks?
We don't do that. So we've looked at the last one, which I think I'd just like to look at it.
We didn't say much about it.
Well, the reason I brought this one up is not because we'd really ever suggest people look at it. Look at these sort of stocks. It's more
doing one of those patterns that you like.
It's doing one of those patterns, but it's more about, beware, really.
Beware.
Yeah, because a lot of people who are new to the market, they get sucked into a story, they buy these sort of stocks and they don't know what to do with them.
Well, they see it jump. I mean, that's a huge jump. Now, obviously, you can go and look at it, the ASX, and find out what the jump is, but they see that and they go, wow, this stock's jumped up, 400%. I'll jump into it now, and then they get stuck in this little pattern for a while.
Yeah, but as you and I proved on other shows, we found that there were big stocks that we could make that sort of percentage on if you get in at the right point of the cycle. Same
with investing overseas. People say to me, I'm going to invest in the US market because I can make better returns, but you can find so many stocks in Australia to do the same thing.
Exactly.
Well, Janine, that is it for our topic for tonight, but if you are watching on YouTube, now's the time to take just a couple of minutes to get your free 7-day subscription to talkingwealth.com. In doing so, you gain access to the full 90-minute version of the Australian Stock Market Show, and each and every show we've done And plus you also get access to my Australian stock market report, which I do every single week, and a library of hundreds of interviews with trusted experts from around Australia and the globe who are all there to help you have or live a happier, healthier and wealthier life. We are constantly uploading new content each and every week, so make sure you head over to claim your free 7-day trial at talkingwealth.com. Now, Janine, before we get into more stocks, I think it's time we get into your favourite segment, and that is the What the segment.
Wow. Well, this week I thought I'd raise something about greedy corporates, or are they just doing their job, which is to make money for shareholders.
Yeah, that's what they're there to do.
So
if
they're
I buy
greedy?
a stock, I want to make money out of it. So, but
All
are
right,
they greedy
let's see.
corporates?
Let's see.
Okay.
We know many Australians are facing a tough time making ends meet, and each time we go to the supermarket, it feels as though they're getting less in their weekly spend. So when I saw this one, I jumped on it. I almost fell out of my seat actually when I saw it, and the title reads, Coles reveals $1.1 billion profit while Aussies can't afford food.
What?
Yep. Which part did you say what the for, by the way? Was it the image of me falling or was it the article?
I don't want to even put in my mind the image of you falling, so it must have been the title.
Okay, I walked right into that one, didn't I? Anyway, the supermarkets are being attacked again. Coles has posted a 4.8% increase in net profit. I also found this graph on the 9 News website. It shows a comparison of profits made by Woolworths and Coles, and so you might think on first glance that Woolworths has far exceeded Coles, and also that profit growth from one year to the next is low.
Nice graph, but Janine, the actual numbers don't lie. Anyone looking at that is going to think that Woolworths is the clear winner though.
Right, and it looks that way, but what a lot of people may not know is that Woolworths is around twice the size of Coles in terms of market capitalisation. That's the total value of the company, which means Coles is that profit is actually better.
Well, I'd agree with that. Now, before we go any further, the question needs to be asked, Janine, should our supermarkets be charities or profitable businesses?
Yeah, good question. Very few articles present the whole picture so that people have a balanced view, and then it's easy to create a posse which gets my goat. Sound effects, please.
How do you do a goat?
You're really good at it, come on.
What's a goat sound?
Nah.
Nah, I don't want to do that. Nah.
Okay, anyway, what they don't tell you is, and the only reason I know how to make that sound is because
You've
I've
got
got a child. What they don't tell you is that both companies have a payout ratio close to 80% of the profit. Shall I stand up and yell this out loud so that all the activists that are involved in writing content for articles hear? Now, if we increase competition and help another international company come into this market, who suffers?
We do. It's not the shopper. I mean, it's not the shoppers. They benefit initially because they get lower prices, but you find the staff and shareholders, they see lower returns. You know, to me, that's the suppliers, the Australian manufacturers, the farmers, the Australian family businesses. They all get squeezed because at the end of the day, Coles and Woolworths are not a charity and they still need to make a profit, and they're Australian.
That's right.
It doesn't go overseas to Germany or wherever else.
Now, how many companies would go into business to generate earnings growth of around 1% per annum? That's what it is.
Well, that's the what there, isn't it?
Isn't it?
Why would you even bother going in for 1%? You couldn't, no. No, is that really a trick question you're asking me, Janine?
I like to ask you the trick questions.
No, okay, but it does really make it, the information really does make it easy for activists to get the public to oppose them, making it easier for international companies to squeeze into the market into the future if you change people's moods. And I think that's disgusting. I mean, everybody shops at Aldi and it's like, I can't stand Aldi.
Well, it's just interesting that they create, it is not easy at the moment, and people are telling me that they're finding it harder to make their budget stretch further and the supermarket. But I guess, what do we do about a lot of the companies out there who provide services? Are we holding them, all of them, to account? No, because Coles and Woolies are easy targets.
Well, they are, and that's the point, is they're easy targets. They don't do it to other companies. I know when I go shopping, and I'm pretty sure you do the same, do I go to the Coles or Woolies and I go Australian, overseas, Australian. And I don't care if it costs me 20 cents or 30 cents more, I just do it. Because I want it, and I go and hunt for the Aussie you know, the Vegemite or the Aussie peanut butter or the Aussie tomato sauce, and not ones that are owned by overseas, because I want to support our farmers.
Yeah.
Now, I understand not everybody can do that. Yeah, I totally understand.
Look, sometimes you go to the supermarket and it's a rush. You know, you've got to do the weekly shop and get in and get out of there. And we don't often think about that. We need to spend that extra bit of time thinking about who this is going to affect in terms of where our money goes.
You know, 9 times out of 10, if I walk into Aldi, I walk out with nothing.
Really? Not even a chocolate.
Not even a chocolate. Not even a chocolate. And I know people love it, and but I just like.
You just can't do it.
I just can't do it. But anyway, that was really a great What the segment, Janine. You're always actually looking out for boards or boards not pandering to the big end of town. I do like that. I'm looking out for all the interest of shareholders. I do like that too. So standing up for shareholders.
Thanks, Dale. I'm doing my best.
Well, you say you should do your best, and you need to do better.
Oh, thank you.
No, you don't. But it's really important we do that and support Australians and support, you know, shareholders and shareholders' rights. And I understand, you know, that those articles aren't necessarily doing that, are they?
No.
But anyway, thanks, Janine. Now it's your time to call us on the show, so get your phone ready in your hand. Ring 92909988. That's 03 for Melbourne, 92909988. So pick up your phone now. Now, while you call us, we will get into answering our next email question. Now, this next email is from Rhonda, who says, "Hello, Dale and Janine from the USA." I believe Rhonda's travelling. I'm asking this question for a friend of mine, Cameron, who has been watching Talking Wealth for the last month or so. Cam bought Mater Group shares some time ago for around 90 cents. That is a company that supplies casual employees to the resources industry and has been doing so for a number of years. In listing on the stock market in 2010. They have a market cap of $1.5 million, a PE 41.74, a PPE 0.16, dividend yield of 80.89 or 89 cents. The shares have been going from strength to strength and are now trading at $7.49. I have quite a lot of concerns about these shares because of both the market cap and the volume, although I realise that supplying casual employees to the industry could be a growing business until the industry realised that it's cheaper to have their own bank of people who prefer to work on a casual basis. Now, Cam has been burnt somewhat and is keen to hang on to these shades or shares, I think she means. I think she's got a typo there. Thanks, Rhonda.
Good on you, Rhonda. That's very nice to help a friend and look out for somebody else.
I think that's dangerous.
Why?
Because how many times have you had people come to you and say, "Oh, a friend of mine's asking about this share," and then they get involved in the middle of it?
I think Rhonda's like me. You know, I used to sit in class and somebody would be sitting near me and I'd hear them say, "Oh, but what does that mean?" And I'd say, "Just ask the question." So I'd end up putting my hand up and asking it for them. So I think that's really what she's trying to do to help.
But is she really going to help him, Cameron?
Well, that's why she's asking us.
I understand that, but even if she tells him an answer and he's watching this, because he will be watching this, even if we give him an answer, is he going to follow it?
It's not a question of whether he follows it, it's expanding his thinking, because, you know, you might be thinking in terms of, you know, in this zone, but now all of a sudden we've expanded his mind to think differently, and that's really what it's about.
I'm trying to fire you up and you're not firing up at all.
Okay.
Jeez.
Not a firecracker
All right,
tonight.
let's talk about Mater Group. What do you think? Because he's made money, he's bought it in and he's making good money on it.
Yeah, I think.
And Rhonda says he's been burnt somewhat in the past, so obviously he'd be nervous about losing profit. So,
well, look, I wouldn't be nervous about losing a bit of profit off the top.
Okay.
You know, if he was risking his own capital, that's different.
Yep.
But Rhonda, I mean, there's always an option when you buy a share to take your capital off the table and just play with the market's money once you're in profit. You know, that's another way of thinking outside the box there. If someone's not comfortable in a trade and they're feeling stressed or nervous about it, but this looks like an amazing. Well done, Cameron. You couldn't have done better. And looking at this, I just think it's a really good story too.
So what's the advice you could give Cameron to get Rhonda out of the loop?
I'm just getting fired up. I haven't even got into it yet. This is my firecracker moment and you're just putting the water over me, like a bucket of water over the top.
So you're just telling me to shut up, though. Okay, so go ahead.
Okay, so looking at the run-up, I'd say that a trend line could be really good there, but it might take him out earlier right, than really early, given the steepness of this rise.
But that's okay.
But that's okay. But look, I mean, you used to use a rough rule of thumb for people who didn't have rules of 15% off a high to protect that profit if they need to.
Yeah.
You know, looking at it, I just want to have a look at the percentage and how far that would be.
Really, really good.
So 15% is sort of here. So, and if we draw a trend line up underneath there, it's probably going to be about the same point, right?
I'd just draw a line in the sand, Cameron, and say I'll sell when it gets
I
to that.
would say get a copy of Dale's book ASAP, have a really good read of it, and then see if you can apply some trend lines to the chart. Decide, you know, what's the risk you're willing to take with your profit. Really, is the bottom line.
Maybe he can steal Rhonda's copy because I think Rhonda's a student of ours or a graduate.
Yep, that's very nice. All right,
Cool.
Is that all you wanted to say? Thanks, Rhonda. Great question.
Well, the stock's called MAD. I think I better stop.
Yeah, you're mad. All right, now it's time that we get into our next lot of questions, which is from Nectarius. Is that correct? Nectarius?
Yep.
Hi, guys. I hope this message finds you well. I'd like to clarify some details regarding my previous communication about Yarn Coal Australia. I had acquired Yale, is it? YAL shares at a price of $5.23.5, and as of now the price stands at $5.14. Historical data from the market index indicates that on September 9, 2022, the share price was at $6.91. The current price represents a downward trend of 34%. The present price range is between $5.04.5, and I think I need a drink of water through this one, and $5.74, placing the current price towards the higher end, towards the midpoint. Since June 26, there has been a steady increase in the share price, coupled with a dividend ratio of 23.87%. It prompts an important question: is there a potential for this share to reach a price point of $7.15, given the increasing emphasis on green energy and the corresponding decline in the popularity of coal? Could we expect the share price to remain around its current level, or possibly decrease or increase further? Did you plant this question? I look forward to your insights on this matter. Kind regards, Nectarius. Very detailed.
Good on you, Nectarius.
Very analytical.
Love it.
Thank you for your question, but I cannot remember the first level you said.
I've put him on the chart because he's
Thank
bought
you.
it. He's bought it on the first green, the big long green line here.
Okay.
So he bought it there at $5.05 or around about that.
Right.
And that's the midpoint there, $5.73 that he talked about through there. So he's asking us to say, can it get up to that $7 odd? And the answer is, yeah, probably could, but that's not really the important issue. It's about how you manage it, because yeah, as we sort of said before earlier, is if we say yes, we think you can get up to there, and let's say it moves up to 660, he may hang on to it, even though it starts to fall away, thinking, well, Janine said, yeah, it's going to get up to $7.14.
Yeah, we don't want him to think that way.
So we don't want to do that. The thing is while it's going up, stay with it. If it's going down, get out of it, and that's really the major thing.
So on that then,
Right,
let's have a
take
look
over.
at where we could.
Now you've caught your breath.
Well, look, yeah, I like the big picture on it.
You
So
do?
long term looks lovely. I mean, if this thing took off, you know,
It does.
sky's
Yeah.
the limit. Where
this
could it
go
go?
to $20 or more.
Okay, but that's one point. Now, I actually had a look at the coal chart as well. So I would actually go and have a look at coal and see how this stock fits in with the coal price. Even we can overlay it on the chart, but I just haven't got the ability to do that right now because we're running out of time. But that would be one of the first things I'd do. And then the next thing is to have a look at what the risk is to the downside if the stock was to fall away from the current price. We can see that it's a little bit more than 15% to that low.
That's
but
nearly 18%.
But hey, you know, I mean, if it came back to 15%, you know, the chance of it actually falling away would be pretty high from there. So, you know, if I'd only just bought it, I'd be pretty comfortable with leaving that stop loss in place there and just allowing it to unfold, would you?
I'd just be moving it up as it moves up underneath it.
Yeah,
Just keep
so
moving it up.
perhaps where would we move it up? We could put it underneath here.
Yeah.
And just let it go from there and see if we can get it up to around that $5.80.
Yeah, but like I said, it's not. You shouldn't necessarily be saying, will it go to this sort of level? It should just say, let it keep running. Just make sure you keep drawing that line in the sand going, if it falls to this level, I'll exit. And if it goes higher, then you just raise that level, that floor, then that's where you would exit. So that's really what you should be doing. But thank you very much for putting a lot more detail into your email. We really do appreciate it. And it shows you're really thinking about this stock. So well done, 2 thumbs up from me. But we do have a caller on the line, Janine. We've got another one. I believe we've got, is it Hazel on the line?
Yes.
3 ladies tonight. Well done.
Yay.
That is fantastic news. Janine's so excited. She's jumping up and down on a seat over there. You can't see her. Hazel, where are you from?
I'm from Central Coast.
Oh, I love Central Coast. Which part about it?
Erina.
Erina, I haven't been there. I've been all around the Central Coast. I've got friends up there, but now you're making me jealous. Beautiful countryside. You do have a question for us tonight?
Yes, it's one of the energy stocks, Karoon. I've had it on my, had an alert on it on my tools for a while, and it's hit about $2.39. What I'm really interested in is a potential trend line going up. It just seems to have been rising since about September 2021.
Yep.
Or 2020. But it just seems to have been going up, and there seems to be about 3 dips, and I'm wondering whether it's likely to keep going.
Okay, so
I haven't bought into it.
I was going to say you haven't bought into it, so so it's in an uptrend at the moment. That's what you're telling us.
Yeah.
And you're looking to possibly buy into it to give you a trigger. Is that?
That's right.
Okay, you're looking at short, medium, or long term.
Well, medium to long term, really.
Medium to long term. Perfect. Have you done any other research on it?
I did a while ago. It was just that it triggered today, and I haven't had the chance to refresh my mind on.
Okay. No, that's fine.
But I know it's a low cap stock, and it's.
It's a good one.
I'm also looking at the volume of activity recently. Isn't very much.
Nah, well, Janine's got it up. She's had a really good look at it, and I'm sure she's going to be champing at the bit to give you the answer. So thank you for calling in, Hazel. We do appreciate it.
Yeah, fantastic, Hazel, and I was really excited about this one because
3 ladies.
we've
That's
talked
awesome.
about. Yeah, I know. We've talked about this stock a number of times on the show.
This is looking awesome.
Almost every couple of weeks, and maybe even last week. I'm just trying to recall. But this looks amazing. I really like it. Well done. There's a really nice line up underneath that run there, so that looks lovely. That's on the monthly chart.
It's not a confirmed trend line yet, but it's close. I'm sure Hazel will be aware of that.
Look, I mean, that's debatable, but we can have that debate if you'd like.
Well, you'd lose, that's fine.
Okay, let's go to the weekly chart then, because clearly we're looking here at this run. Now, that low there is $1.88. What's that one? Can you read it?
That is $1.88, that low.
Okay, fantastic. So, look, we're getting very close there with that trend, but it's right near that high there. Might meet a little bit of resistance. It's trying to push through, but you know what? I really like it.
I
think
do like it.
It's fantastic.
I
So
think she's
good choice.
Volume's a little, it's sort of a bit lower the last couple of weeks, but that's nothing too bad because it was going sideways, but that's not too bad. I do like what she's talking about here, especially if it breaks up through this sort of level, about 230, 240-ish, and gets to that 245.
Good one, Hazel.
Is there anything else you want to say about this one? I mean, obviously, Karoon area, it's looking at this, it is quite a volatile type of stock, which you did mention. And
well, look, is it going to go back to being that again? It may not, you know, be as volatile as it was back in 2010, 2011. It may just be much more consistent.
Well, look at the angle.
Can we have a look at the volume?
Look at where you can't even see that angle anywhere almost. The whole.
It just doesn't move that way anymore.
No, it doesn't move that way
So can we
anymore.
just have a look at the weekly chart again just quickly?
Yeah, okay, I'll do that.
Okay.
So you can
Gee,
have the
you're
mouse.
fast tonight, aren't you? We're getting,
I just say
getting
yes,
to the
ma'am.
chart. Wow, well done. Your wife trained you well.
She did.
All right, so we're looking at this sideways move and the activity there, and I'm just trying to see whether, how many times has it hit? 1, 2, 3, 4.
It's going.
So it should go through, shouldn't it?
It's going to go through.
All right,
I
we
like
like
it.
that. Well, that's all we have on KAR, Karoon Energy. Now, we hope you enjoyed our show on YouTube. Please show your support for us by commenting below this video because we'd love to hear your favourite part of the show. It may be Dale's joke, but that's okay. Also, give us a big thumbs up. It really helps new people discover these videos, and make sure that you subscribe to our channel so you know when we go live. For those watching via Talking Wealth, well, stay tuned for the bonus content that we promised.
In next week's show, we get into whether you should buy nickel now or uranium. What do you think should be the answer? As always, this means we'll look at the best stocks to buy in those areas in 2023. We'll also take your phone calls, answer your questions, and so much more. So make sure you put next Tuesday night show on your calendar. And now remember, if you have a stock that you want us to look at or you have a burning question, then send an email to info@wealthwithin.com.au and watch next Tuesday night show for your answer. Also, give us a big thumbs up by liking the show and make sure you subscribe to the channel. And make sure you comment below this video about what was your favourite stock from tonight's show. Now it's time to say goodbye to our viewers on YouTube. We do hope you enjoyed what we presented tonight. For those watching on talkingwealth.com, stay tuned with us for your bonus content. As always, thank you for joining us. For now, goodbye, good luck, and good trading.